य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैत 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 एतद्द्वैत.
My dear students, greeting of the day. Hope all of you are in good health and in stay safe conditions. During this pandemic and hard times, I advise all of you to be at home, stay safe with proper precautions and with care. Hope you all are following the ICAI and SARC website regularly for various information, deliberations and announcements. By now, you might be aware of May 2020 examinations are cancelled and got merged with November 2020 examinations. ICAI also announced placement services for the second time recently for the benefit of newly qualified CAs, and the president of ICAI, CA Atul Kumar Gupta ji, had launched the industrial training portal through a live webinar on June 14th, witnessed by approximately 24,000 students. Due to the outbreak of COVID-19 pandemic, SICASA Visakhapatnam is planning to organize certain activities virtually for the benefit of students on both academic and professional front. As part of this endeavor, we propose to broadcast the deliberations by students on academic topics, and this series of academic sessions is coined as Yaukthika Sikshana, the art of virtual learning, which will be streamed on our official YouTube channel of SICASA Visakhapatnam. Students who are interested to give presentations on any of the academic topics or on soft skills are invited and can contact Team SICASA through our official mail ID sicasavskp@gmail.com. SICASA Visakhapatnam is also launching a newsletter with information, updates from ICAI and SARC along with good articles presented by students and professionals in academic interest. We are planning to organize live deliberations and sessions by eminent speakers from CA fraternity on various professional and academic topics through Zoom app. We recognize that you are a bundle of talented professionals with multifaceted skills. To unleash this champion in you, we would like to organize SICASA Visakh's Talent Pool program, which shall be brought before you in due course of time. We look forward to having these events wherein you all can actively participate and exhibit your talents in various fields. I request all the students to follow the official website of Visakhapatnam branch of SARC of ICAI and also various social media apps such as Insta, Facebook, WhatsApp and Telegram for updates about the programs from time to time. I thank our Central Council member CA Prasanna Kumar Garu, Chairperson of the branch CA Bharati Dev Garu, and my colleague management committee members and Team SICASA for giving me all the support and guidance for taking up these activities I request you all make this year 2021 as a vibrant year in all respects of Sikasa, Visakhapatnam by participating in all the programs in good number and make best use of these resources. With good wishes to you all, C. A. Murali Krishna, Chairman Sikasa.
Hello everyone, I am Kumar from Visakhapatnam, the city of destiny. Today I am here to discuss a topic on financial instruments, that is Ind-AS 32, 107 and Ind-AS 109. We will discuss financial instruments in a bird-eye manner. Here we go, the contents of my topic are in Ind-AS 32, understanding of financial instrument, financial asset, financial liability, compound financial instrument and offsetting. In Ind-AS 109, classification, recognition, derecognition and impairment of financial asset and financial liability. In Ind-AS 107, disclosures. So perhaps due to greater content in the topic of financial instrument, they have been classified into Ind-AS 32, Ind-AS 109 and Ind-AS 107. Ind-AS 32 is dealing with presentation part and Ind-AS 109 is dealing with recognition and measurement part and Ind-AS 107 is dealing with disclosure part of the financial instrument. So what is financial instrument? Paragraph 11 of the Ind-AS 32 says a financial instrument is any contract that gives rise to financial asset of one entity and a financial liability or equity instrument of another entity. By looking at this, we can say there has to be a contract. So for being a contract, there should be at least two parties. The contract may be either written form or any other form. So we can appreciate the definition of financial instruments only by understanding the following terms: financial asset, financial liability and equity instrument. So what is financial asset? Now, financial asset. A financial asset is any asset that is cash, an equity instrument of another entity, example investment in equity shares. A contractual right to receive cash or other financial asset from another entity, example trade receivable, loan given. We can have some other example like bills receivable also. And a contractual right to exchange the financial assets or liabilities with another entity under conditions that are potentially favorable to the entity. Example derivative financial asset. Say for example, if we purchase the call options of TCS Limited, if the value of share is increasing, then that is potentially favorable to the entity, then we can recognize that as a financial asset. Financial liability. In the financial asset, we have seen it is a contractual right, whereas the financial liability is a contractual obligation. We will see the same. A financial liability is any liability that is a contractual obligation to deliver cash or another financial asset to another entity, example trade payables, loan taken, etc. A contractual obligation to exchange the financial assets or financial liabilities with another entity under conditions that are potentially unfavorable to the entity, example derivative financial liability. In the financial asset, we have seen potentially favorable to the entity, whereas the financial liability is a potentially unfavorable to the entity. Now, equity instrument. An equity instrument is any contract that evidences a residual interest in the assets of an entity after deducting all of its liabilities. Example, ordinary equity shares, share warrants, etc. Equity instrument. We can understand financial instrument, financial asset and a financial liability by understanding the following examples. Example 1. X entered into contract to give loan to Y. Here the contract between X and Y is a financial instrument, whereas the amount receivable to X is a financial asset to X, whereas the amount payable by Y is a financial liability to Y. Example 2. RA Limited granted equity shares to Sarvan, an equity shareholder. For RA Limited, it is an equity instrument, whereas for the Sarvan, he is a shareholder. For him, it is a financial asset. Whereas the contract between the RA Limited and the Sarvan Limited is a financial instrument. Example 3. RA Limited entered into contract to sell PPE for cash to retailer. So here RA Limited received cash from the retailer, so it is a financial asset, whereas the retailer received PPE, it is not a financial asset. Compound financial instrument. Compounded financial instrument contain the characteristics of both financial liability and equity instrument in a single contract. So in a single contract, there are both the characteristics of financial liability and equity instrument also. Split accounting Ind-AS 32 says the financial instruments presentation requires to present the proceeds from such contract as financial liability and equity instrument separately. So Ind-AS 32 split accounting says whenever we receive the proceeds from such contract, it needs to be segregated into financial liability and equity instrument separately. Examples are redeemable debentures with discretionary dividend, potentially convertible redeemable preference shares, perpetual loan with mandatory interest. Offsetting of financial asset and financial liability. As per Ind-AS 32, a financial asset and a financial liability can be offset and a net amount can be presented in the statement of financial position if the following conditions are satisfied. Currently, the entity has a legal enforceable option to set off the recognized amounts, and the entity intends to settle the amounts on a net basis or to realize the asset and settle the liability simultaneously. So, if the following conditions are satisfied, then we can offset financial asset and financial liability. What are the conditions is nothing but entity has a legal enforceable option and the entity intends to settle the amount on a net basis. If these two following conditions are satisfied, then we can offset financial asset and the financial liability. So what do you think? Can we offset the financial asset against the equity instrument? This is quite natural. The answer is no. So now Ind-AS 109. Ind-AS 109 is dealing with recognition and measurement of financial instrument. First classification. Categorization of financial asset is based on the business model that determines how cash flows of financial asset are collected and the contractual cash flow characteristics. So classification is basically based on the business model and the contractual cash flow characteristics. So the financial assets are classified into fair value through profit and loss, amortized cost, and fair value through comprehensive income. The financial liabilities are classified into fair value through profit and loss and amortized cost. Recognition. The financial asset will be recognized at fair value. Exception. Subsequent recognition of financial asset will be measured by applying EIR when it is measured at amortized cost. So if it is initial recognition, irrespective of whether the financial asset measured at amortized cost, FVTPL, FVTOCA, it will be measured at fair value. If it is subsequent recognition, if the financial asset measured at amortized cost, then the value will be measured by applying EIR. Financial liability. Financial liability will also be recognized at fair value. Exception. Subsequent recognition of financial liability will be measured by applying EIR when it is measured at amortized cost. So the treatment is same for financial asset and the financial liability. The only difference is that whenever we incur transaction cost, in case of financial asset, we will add the transaction cost to fair value. If it is financial liability, the same transaction cost will be deducted from the fair value. Now derecognition. A financial asset will be derecognized when the contractual right to receive cash flow expired or transferred. So whenever the contractual right to receive cash flow expired, then obviously we will derecognize the financial asset. And financial liability. Financial liability will be derecognized when the obligations specified in the contract discharged, cancelled, exchanged or modified. Impairment. Financial asset. An entity shall recognize allowance for the expected losses on the financial assets only if it is measured financial assets at amortized cost or fair value through other comprehensive income. So in case of amortized cost or FVTOCI only, we can recognize the impairment. For the financial liability, impairment is not applicable. So now Ind-AS 107 disclosures. The objective of any disclosure is that the users of the financial statement can evaluate the financial position and performance and they can take their own decisions. So here in Ind-AS 107 provides disclosure for financial instrument to be made in the financial statements that enable users to evaluate the significance of the financial instruments for the entity's financial position and performance, the nature and extent of risk arising from the financial instrument to which the entity is exposed during the period and at the end of the reporting period, and how the entity manages those risks. So now synopsis. Until now we have learned Ind-AS 32, 109 and 107. In Ind-AS 32, we learned financial asset, financial liability, compound financial instrument, offsetting principles. In Ind-AS 109, we learned recognition, de-recognition, classification, and impairment. And in Ind-AS 107, we learned disclosures. Thank you so much, everyone. I'm very happy to be part of this Sikasa. Hope my presentation gave a small idea on financial instruments. And thank you so much. Your Sarvan Kumar Arya signing off. Bye bye.
Hello everyone, my name is Bhavani Shankar and I welcome you all to my presentation on one of the most interesting topics in the GST, inspection, search, seizure and arrest. This is going to be very interesting and in fact it's going to be very cinematic. Have you watched this film Suryaki Gang? If you have already watched this film, you will be able to establish a better link between the topic which we are going to discuss for the next 30 minutes and the film. I won't say that the provisions have actually been assimilated in the film, but you will have a bare idea of what is an inspection, search, and seizure. So, in this presentation, I'm going to discuss section number 67 to section number 69 of the CGST Act 2017 and section number 72 of the CGST Act 2017, as well as rule number 139 to rule number 141 of the CGST Rules 2017. So, why is this topic important? Well, in any tax administration, there are two kinds of taxpayers. One is genuine taxpayers, and the other one is insincere or bogus taxpayers. This insincere or bogus taxpayers takes undue advantage over this genuine taxpayers. Therefore, the government, in order to protect the interest of the genuine taxpayers, as well as to protect the interest of the revenue, it has these provisions for inspection, search, and seizure. And I'm telling you, these provisions are not exercised in all the cases. They are exercised only in case of exceptional cases because these provisions are very sensitive. These are like last resort to the government. So before we actually plunge into the topic, it's imperative, it's very important for us to understand various classes of officers, various ranks of officers in the GST, because various powers have been assigned to various officers under the GST. So let's have a look at it. I'm reading from the below to the above. The first one is Assistant Commissioner of GST, Deputy Commissioner of GST, Joint Commissioner, Additional Commissioner, Commissioner, Principal Commissioner, Chief Commissioner, and Principal Chief Commissioner. So let's get started with the topic. So I have given you the definitions of inspection, search, and seizure on the screen. But in simple terms, inspection means the GST department officers has the right to access the place of business of a particular taxable person, or a transporter of goods, or a warehouse or godown of any person. They have this right to access to place of business. Search means the officers who are conducting the search has in their mind that something is suspicious in this particular place. Something is suspicious about a particular place or an object or an area. So they examine very carefully, very carefully, decently they'll review so as to obtain the evidence of a concealed crime. And seizure is taking the possession of the property of a particular person under legal process. So when we look at these three terms jointly, when we jointly look at this three terms, it is understood that inspection is a softer term, whereas search and seizure are a little scratchy. So who has this power to do inspection? Can any random person access to a particular taxable person and do inspection? No. Section 67 subsection 1 of the CGST Act states that the power of inspection. Section 67 subsection 1 has two clauses, clause A and clause B. These clauses have listed out various reasons that are to be believed by an officer who is not below the rank of a joint commissioner. In that case, he can authorize any other officer of the GST to conduct inspection at a particular place of a taxable person or any other person. Let's look at it. So, in case any officer is not below the rank of a joint commissioner, which means an officer who is a rank of joint commissioner or above, if he has reasons to believe that, according to clause A, any transaction relating to supply of goods or services or both has been suppressed. Suppose a goods worth 1 crore has been sold, it has not been recorded, it has not been accounted in the books of accounts, and GST has not been paid on it. In that case, it is a kind of suppression of a transaction. And if any person has claimed input tax credit in excess of what is actually attributable to claim. Suppose a particular person is attributable or entitled to claim rupees 5 crore, but he has claimed 7 crore rupees. He has claimed rupees 2 crores in excess. And any person has contravened any provisions of the act or rules made thereunder. Whereas clause B deals with any goods which have escaped the payment of tax or are kept in a manner to cause evasion of tax. For example, there is 50 kgs of gold on which tax has not been paid and it has been stored in an underground godown. And such goods are in the custody of any transporter of the goods or owner or operator of a warehouse or godown or any other place. So if an officer who is not below the rank of a joint commissioner has reasons to believe that the following things that are listed in clause A or clause B have happened, then he can authorize any other officer of the GST department to conduct inspection at the place of a particular taxable person or the place of transporter of goods or owner or operator of a warehouse or a godown or any other place. How will this officer authorize that particular person? How will he authorize? Will he simply send a WhatsApp message or will he send some call him and yeah, you go and do inspection on that particular place of business? No. He has to follow certain procedure. He has to issue an authorization letter. So he has to issue an authorization letter in form GST INS01 authorizing a particular officer of the GST department to go and conduct inspection at a particular place of business of a taxable person or an owner or an operator of a godown or a warehouse. So, for example, the joint commissioner of a particular jurisdiction has authorized the assistant commissioner or any superintendent to go and conduct inspection at the place of business of ABC Limited. So this is the case. And 67 subsection 2 power to search and siege. This is almost similar to section 67 subsection 1, again where any officer who is not below the rank of a joint commissioner has reasons to believe that out of the inspection conducted, they have found out that any goods are liable to get confiscated under section 130 or any documents or books or things which shall be useful for any proceedings under this act. For example, like I mentioned earlier, 50 kgs of gold has been sold and it has not been recorded in their books of accounts. So or the 50 kgs of gold has kept in an underground godown. So in this case, the goods have actually evaded from payment of tax. So in this case, the joint commissioner or any other officer authorized by him has reasons to believe that these goods are liable to get confiscated, and they can seize those goods. Or any document or books of accounts are relevant for any further proceedings in the inspection, then they can seize those documents and they can seize those goods. How will they seize those goods or documents? They will issue an order of seizure because they cannot simply grab this goods or grab these books of accounts from a particular taxable person. Everything has to be done very procedurally. So this order of seizure should contain the following details. The details of goods seized. They have to issue this order of seizure in form GST INS02 and it has to contain the serial number, description of goods, quantity, mark, make or model, and remarks. For example, 50 kgs of gold has been seized. In that case, description of goods will be gold, quantity will be 50 kgs, make or mark or model will it be 24 karat or 22 karat gold, like that. And details of books or documents or things seized. They have to list out all the documents or books of accounts that have been seized, right? So they have to maintain a proper inventory of what they have seized. And in case the seizure of goods is not practicable, for example, the jurisdictional joint commissioner has authorized an assistant commissioner of that particular joint jurisdiction to go and conduct the inspection at the place of business of ABC Limited. There they found that a machinery has not been accounted in their books of accounts. and that machinery is liable to get confiscated. In that case, is it possible to take the possession of that machinery? Can they take the possession of the machinery? No, seize in the sense possession of a particular good. In that case, where it is not practicable to seize a particular good, then they can issue an order of prohibition, which states that the goods so seized shall not be removed or part with or dealt with any manner without the previous approval of the officer who has issued this order of prohibition. For example, Assistant Commissioner of Jurisdiction of ABC Limited has issued this order of prohibition. Then this machinery shall not be part with or removed or dealt with without taking the previous permission from the Assistant Commissioner. And this order of prohibition is issued in Form GST INS 03. And the goods have been seized. Is there any possibility that the goods that are so seized can be released? Yes. Section 67 subsection 6 provides for this mechanism, where it states that the goods so seized can be released on a provisional basis on execution of a bond under security. Bond to what value? Bond to the extent of the value of the goods so seized. For example, in my example, 50 kgs of gold has been seized. For example, the total value of this 50 kgs of gold is 1 crore. The bond has to be executed for a value of 1 crore and security in the form of bank guarantee to the extent of applicable tax, interest, and penalty. For example, the applicable rate of tax on this gold is 3%. Then 1 crore into 3%, which comes up to 3 lakhs, and applicable interest 18% or 24%, and penalty which may come up to some 8 lakhs or 9 lakhs. So they have to execute a bond, and the GST department will release these goods on a provisional basis. And if a proper officer requires that particular custodian of goods to produce those goods to him, then the person to whom these goods have been released have to produce these goods to them. If he fails to produce, then the GST department officers has right to encash the bank guarantee and use this amount to settle the tax. For example, the taxable person has failed to produce those goods to the GST department officer. In that case, the GST department officer can go to bank and encash it and derive the amount and use it to adjust the applicable tax. So how to execute a bond? Bond has to be executed in Form GST INS 04. Okay, so disposal of specified seized goods. See, though goods are seized, there are certainly some goods which are of perishable nature or hazardous nature. For example, they have been notified in notification number 27/2018 Central Tax dated 13/6/2018. Salt, rawhides, newspapers, cell, batteries, fireworks, red sander, sandalwood, food articles, unclaimed goods which are of depreciable on account of change in technology, change in model. So these goods, even though the GST department sees and keeps with them, is of no use because they get depreciated over time. Right. So these goods will be released by the GST department on payment of an amount which is lower of market price of the goods, but the amount of tax, interest, or penalty applicable on that particular goods. Okay. So yeah, and then the goods will be released, and the order of release of goods will be issued in Form GST INS 05. Power to access premises, and this is my favorite subsection in the entire presentation because we have grown up watching these kind of things. So power to access premises. If any GST department officer comes to or visits a particular taxable person's place of business, and that particular taxable person refuses to give access to that particular place, he's giving access to the entire place of business, but he's asking the GST department to not go to that one particular room or one particular almirah or one particular thing, is refusing to allow them to go there. In that case, what an intelligent officer will do? They will certainly search that thing. So they have this right to break down the door or premises, or can break the almirah, electronic safe box, etc. I think we are very familiar with this process because we have seen a lot of movies concerning this thing. So they have this right actually. And grant to take extracts. So I have mentioned it to you that in section number 67 subsection 2, the GST department officers has a right to seize the books of accounts, documents or things that are relevant for any further proceedings under the act. So let me ask you one thing. Do we maintain our books of accounts or do we maintain these records only for the purpose of GST? Don't we have any other use? They're worth damn. So that's why the GST department has, the government has provided for this subsection 5 where the taxable person can request the GST department to take the copies, Xerox copies of that particular books of accounts or documents that are so seized. And in some cases, where the GST department officer opines that if he is of the opinion that allowing that particular taxable person to take Xerox copies of that particular books of accounts will adversely impact the investigation, then he may refuse to do. Let me tell you how. For example, the inspection is conducted on a taxable person who is a very influential person, sort of a politician. So if the GST department officer gives this documents to take extracts or Xerox copies, then yeah, a lot of gimmicks might happen because they are very influential. They may tamper these records within no time. So if he opines that allowing this allowing these books of accounts or documents to a particular taxable person to take extracts will adversely impact the investigation. In that case, he may refuse to allow them to take extracts or copies. Then, so if so, the inspection has been conducted at the place of business of a taxable person. They have searched it and they have seized few goods and books of accounts. Then the GST department should issue a notice. After conducting the inspection, they have to certainly issue a notice. What are their findings in their inspection? And they should ask the taxable person to give reply to that notice. A reasonable opportunity of being heard to offend themselves. Okay, so they have to issue a notice. So yes, notice has been issued. After the issue of notice, if there are any books of accounts or if there are any documents that are not relevant for any proceedings, for the proceedings under this act, or they are not relevant on the basis of which the notice has been issued, then they must be returned to the taxable person from whose custody these books have been taken within 30 days from the date of issue of notice. For example, inspection has been conducted on 1st January 2020 and these books of accounts or documents have been seized on 1st January 2020 and the notice has been issued on 1st March 2020 within 30 days from the date of notice, that is within 30 days from the 1st March 2020, these books of accounts or documents which are not relevant for any further proceedings are to be returned to the taxable person. Okay, because they should not take the right of a taxable person to get access to his own books of accounts. Principles of natural justice will prevail here. And releasing of goods. So like I mentioned, once an inspection or search is being conducted, the GST department must issue a notice, right? If no notice has been issued, then the goods that have been seized during the course of inspection must be released within 6 months from the date of seizure of goods. For example, inspection has been conducted on 1st January 2020. And within 6 months, that is till 30th June 2020, no notice has been issued. In that case, the goods that are so seized must be released. Or if the GST department is of the opinion that they need some more time to figure out what exactly has happened in this inspection, they need some more time to figure out the things or to figure out any fraud or anything has happened in the inspection, then they may further extend this time for 6 more months, not more than 6 months. And inventory of specified goods, like I mentioned, the goods so seized or documents so seized, the proper officer who has seized those goods must maintain an inventory or record of these things. And section 67 subsection 11, retention of accounts, register or document. This subsection actually speaks volumes. This actually presents the power, the immense power that the GST department has got in the course of inspection, search and seizure. The documents or books of accounts that are so seized in the course of inspection, the GST department officers can retain these books of accounts with them as long as necessary for, for any proceedings or any prosecution under this act. So, procedure of search and seizure. Section 67, subsection 10 says how to do this inspection, how to do the search and seizure procedure. So, section 67, subsection 10 says that the inspection, search and seizure has to be conducted in the manner provided under section 100 of the Criminal Procedure Code. So under this section, the officers who are conducting the search and seizure has to follow certain principles. Like I mentioned in my introduction, that inspection, search and seizure are very sensitive. It takes on the self-respect of a particular taxable person, doesn't it? So that's why the GST officers who are conducting this inspection has to follow certain principles. So let us look at them CV time. 1. Search warrant. Search cannot be done without a proper search warrant. Second one is lady officer. If the search is being conducted at the residence of a particular taxable person, then a lady officer must accompany the search team. So if you have watched the film Surya Ki Gang, the lady officer is Ramya Krishnan who accompanied the team. They done the search at the residence of that particular minister, I think, and disclose the identity. Before starting the search, the GST officers should disclose their identity. Yes, and the assistant commissioner of this jurisdiction and the superintendent of this jurisdiction, and I'm authorized to do inspection by this particular officer, that is joint commissioner or any other rank. They have to disclose their identity. What if some gunda or a rowdy or some random person comes in disguise to a particular taxable person, does all these things? That's why they have to disclose their identity. Next, acknowledgement of search warrant. The search warrant must get signed by the person in charge of that particular premises. For example, search is being conducted at the place of Mr. A. Then the GST department or the search team which is conducting the inspection or search has to get it signed. The search warrant they have to get the search warrant signed by the person in charge. And it should also get signed by 2 independent witnesses. And search to be done in 2 independent witnesses. Search has to be done in the presence of 2 independent witnesses, and these 2 independent witnesses must be they must be from the same locality. If the witnesses are not available or not willing from the same locality, the witnesses can be from the other locality. See, this is actually talks about the transparency of the governance, right? And team of officers who has done this personal search should, who is doing the search should offer themselves for personal search before the start of search and after the conclusion of the search. See, of course, this will not happen. What if an officer who brings something suspicious or something fishy along with him and drops it at the place of a particular taxable person and claims that this actually belongs to the taxable person and blames him? This is power. So that's why they have to offer themselves to the person in charge of the place where the inspection is being conducted before and after the search. And after the conducting search, the GST department or the search team should prepare a panchanama or mahazar which states the documents so seized or goods so seized. And the search warrant should be written after conducting the search. The search warrant should be returned to the issuing authority, their joint commissioner or any other officer of higher rank. And the issuing authority must maintain the register of search warrants, and a copy of the panchanama or mahazar along with its annexure should be given to the person in charge or owner of the premises being searched under acknowledgement. So section 67 subsection 12, surprise checking of invoicing. Again, this is an interesting concept. This is completely different concept. So do you remember during the initial days of inception of GST, there were a lot of deals between the sellers, shopkeepers and the customers, where the sellers told if you want GST invoice, we'll charge higher price, and if you do not want GST tax invoice, we'll charge a lower price, which is actually against the law. They are apparently violating the provisions of the GST Act. So what the commissioner or any other officer authorized by him has the power that they can visit the premises of that particular taxable person and they can purchase any goods or they can avail any services to check whether the tax invoice or the bill of supply is being issued in accordance with the GST Act. and once they have checked it, they will return the goods to the shopkeeper or that particular taxable person, and the taxable person should refund the amount. See, the policies like once goods purchased, no, not refundable, those things will not apply here. Inspection of goods and movement. So a transporter or carrier of goods who is carrying goods, he has to carry certain documents, for example, tax invoice or e-way bill along with him, and he should get them validated. So in the course of movement, the GST department officers has right to stop that vehicle and inspect that particular vehicle and verify the documents and everything. And this carrier or transporter of goods should submit these documents, to produce these documents to that proper officer for inspection. He cannot deny, saying, yeah, these documents do not belong to me, or these goods do not belong to me, how would I submit it to you? The GST department or the GST officers has got power under this subsection. And power to arrest. So power to arrest, section 69 subsection 1 talks about order to arrest. Section 132 subsection 1 of the CGST Act 2017 has specified various offences. I'll read it out. In case a person has committed the below mentioned offences, namely supply of goods without issue of any invoices to evade tax, and issues any invoices in violation of the Act to avail any wrongful input tax credit or refund of tax. Suppose he issues a wrongful refund voucher to a particular person so as to claim refund from the GST department, then this is an offence which has been specified in section 132 subsection 1. And availed input tax credit on false invoices, and this fake input tax credit cases, they are, we have been seeing a lot of cases these days. We call it as purchase and sale of input tax credit, and collects the tax from the customer, but they do not pay to the government within 3 months from the due date. For example, the tax has been collected on 5th July 2020, so the due date to file GSTR 3B of July is August 20th, and within 3 months from 20th August 2020, if the taxable person do not deposit this amount that has so been collected from the customer to the government, then this is an offence under section 132 subsection 1. And where he has committed these offences, the punishment has been specified in section 132 subsection 1 clause 1, clause 2, and section 132 subsection 2, where the commissioner has reasons to believe that the person has committed any offence that has been specified in section number 132 subsection 1, and it is punishable in section 132 subsection 1 clause 1, where it says that the amount so evaded, the tax so evaded, or the input tax credit wrongly claimed, or the refund wrongly claimed exceeds 500 lakhs, which is exceeds 5 crore, then he is liable to get imprisoned for a period of 5 years along with fine. Whereas the amount of tax so evaded or input tax credit wrongly claimed or refund wrongly claimed is more than 2 crores but does not exceed 5 crore, more than 200 lakhs but does not exceed 500 lakhs, then he is liable to imprisonment for a period of 3 years along with fine. Where this 132 subsection 2 states that where the offence is committed, offence that has so been specified in section number 132 subsection 1 is done for a second or a subsequent time, then the particular person who has committed this offence is liable to get imprisoned for a period of 5 years along with fine. So the person who has been arrested, so if a person has been arrested for a cognizable and a non-bailable offence, cognizable offence means serious offence. A particular person can be arrested if it is a cognizable offence. He can be arrested without a search warrant, but he must be told, he must be made informed as to why they are arresting that particular taxable person. And if he has been arrested as such, he has to be taken to the magistrate within 24 hours from the date of arrest. From within 24 hours from the arrest. And if a particular taxable person has been arrested for a bailable offence, non-cognizable offence, then he may be released on bail. If he has not been released on bail, by default, he has to be taken to the magistrate. Okay. However, the Deputy Commissioner of the GST or the Assistant Commissioner of the GST has the same power same power that the person in charge of a police station has got to release a particular taxable person on bail. So last section, section number 72, officers to assess proper officer. Tell me one thing, what are the main sources of revenue to the government? One of the most important and significant part of revenue to the government is tax revenue. And even in tax revenue, indirect tax revenue constitutes a major proportion, right? So in order to protect the interest of the revenue, the GST department uh, GST department and the government has provided for this section, where it states that the officers of the other departments such as police department, railway department, customs department, and those officers engaged in the collection of land revenue, for example village revenue officers, mandal revenue officers, should assist the proper officers in order to implement the provisions of the GST, because government do not want to leave any stone unturned in collecting the revenue. So, and further, the government may empower and require any class of officers other than specified above to assist the proper officers in the implementation of the Act. So, with this, I conclude my presentation on inspection, search, and seizure. I think we have better apprehended this concept. So, finally, what I want to conclude is that be a genuine taxpayer. Do not be a bogus or insincere taxpayer, because we have to be a genuine taxpayer, and if you evade any tax, there are, I mean, once you are inspected or searched or seized, it's a kind of a turbulent process. It's time consuming, it's very lengthy process. Do not get into the trap of this inspection, search, and seizure. So be a genuine taxpayer, and yeah, pay tax to the government duly and on a timely basis. Thank you.